We need to talk about something big that just happened, and it's not just the trade court strike down on Trump's tariffs, it's also Nvidia earnings. With a big after-hours move, it's pushing towards that next big level. Could we be seeing Nvidia making an all-time high relatively soon? In today's video, we take a look at the big dark pool levels that have been breached, causing positive gamma in after-hours trade. And of course, we need to talk about that sneaky US 2000. Could it be time for small caps to do well on the back of all of this big news? Stocks, commodities, and cryptos, let's cover all of them right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. The latest macro, the data, and of course, the key levels and options flows. Now, it may look like nothing happened on the surface, but that's because everything was in the after hours today. And we knew it would be because it was the calm before the storm for Nvidia earnings. Were they good? The short answer, yes. Up 12% quarter on quarter, 44.1 billion, which is a 0.8 billion beat. Gross margin, 61%. Operating margin, 49%. And of course, financial year 26, the guidance, that's all important. Revenue, 45 billion, so that's up on the 44.1 at a $0.7 billion miss. Overall, generally speaking, Nvidia was flying through the post session. And of course, it was already pushing gamma walls that we'll talk about later on today's video. Past 140, next stop 147, 148, or maybe even an all-time high. We'll go through that later on. Then came the conclusion here, a massive court ruling. And of course, this shows here that the court holds the foregoing reasons that the IEEPA does not authorize any of the worldwide retaliatory or trafficking tariff orders. So this basically is saying here that this conclusion entitles the plaintiffs to judgment as a matter of law, as the court further finds that no genuine dispute as to any material fact. Summary judgment will enter against the United States. So basically, we are seeing now the idea that these tariffs are not legal and therefore will need to be removed. Will that happen? Well, of course, the market has already started to move. And of course, already, I'm sure this is going to go back into the courts and we won't have any outcome for a while. But either way, markets were going ballistic and they broke past some key levels, including here, this ranked cluster. And this is something that we've been talking about recently and basically showing that we have got a positive gamma squeeze on board. And this basically means that, for anyone that doesn't know, options hedgers will need to hedge their positions as there are so many calls outstanding that need to be now underwritten. So what's going on? It looks like we've got a squeeze on our hands and markets could be moving a little bit higher before they come back down. We also saw TSM, a massive, of course, semiconductor manufacturer, get a monster trade, the largest ever recorded, coming back through on the close. Now, what happened? Straight after that, we saw Nvidia earnings. Did they know something? What's going on here? Usually you'd say that probably is a sell at these levels, but maybe it wasn't. Maybe it was actually a buy. The largest trade ever recorded for TSM right at that close. And of course, the next session, if whoever is the buyer on that side, is probably going to be quite happy. This goes on the back of quite a few other positions we were speculating on. One of those being the dark pool sweep of the previous 24 hours that we thought might have been a sell, but in this case, maybe it was a purchase because of course, the markets have then shot back up and the next stop is up here in the highs. So quite a lot more to go potentially here for the Magnificent Seven and some of these stocks. Speaking of things going absolutely ballistic, take a look at this latest chart here of flows when it comes to Bitcoin and options interest. According to Glassnode, the latest data here shows that options are up big time when it comes to Bitcoin, and we have a plus $25.8 billion open interest to $46.2 billion of options open interest, causing again gamma squeezes across the board. So if you've wondered why Bitcoin is running so hot, it's not just because the technicals are looking really good, but it's also because there are huge amounts of options that are needing to be hedged going up and up and up at this case. Now, what else is going on? Well, of course, we've seen a lot of pessimism. We've seen some selling from particular hedge funds and some commercials recently, and the markets have been climbing the wall of worry. Well, were they right all along? I mean, at this stage, we might not even have tariffs coming forward in the next couple of months. And of course, that's pushing markets to all-time highs. But as you can see here, the latest macro charts, generally speaking, these are the points of recovery. Most likely points like 2020 in terms of similarity. If we have a look at the latest charts here that we posted over on X, go check it out. Links in the description down below if you're interested. You can see here that retail clients were purchasing the last 24 hours, the last weeks, the last months, and we already know that. We know retail's been a big buyer. Corporations, so corporate buys have been pretty large, but hedge funds have been caught behind. No surprise, hedge funds often get it wrong. But more interesting than this, institutions are super behind. And when institutions are super behind, generally speaking, markets will do a little bit of a pullback. But if we remember back in 2020, that didn't really happen, did it? We just got what we call a pullback in time or a pit style. So here we have institutions selling into the rips, at least based on this latest kind of data. And last week in particular, selling at a pretty high rate. Now, what do they know that we don't? Could it be the longer term aspect? Well, of course, there are always current contradictory charts to these types of things. And this one here shows that last week we actually had long-term smart money models and short-term smart money models going into that extreme buy period. And basically what this is telling us is that at least on many metrics, similar to before, market makers and market traders have gone in pretty hard. And oftentimes they're a little bit late to the party. Sometimes they're really early. Sometimes they're even wrong. As you can see over here, they've been wrong over here. But this is another good sign to go along with that 770 thrust, the Zweig breadth thrust, and of course the De Graaf breadth thrust that we saw over the last month and a half. And as we've stated, we do not go against Zweig breadth thrust on a multi-month, even a 9-month kind of base. And the reason why is they haven't been wrong since 1950s. So it's, although, you probably don't want to forget the damage that's being done here to the economy, you can't go against the Zweig breadth thrust when you're talking about multi-month runs. And so far, so good for those runs. Now, does that mean there are alternative assets for potentially people that are feeling a bit more bearish on the economy? Well, we've talked to death about gold. We obviously love gold and it's done quite well. However, it's been in a bit of a holding pattern. And even just over the last 24 hours, we've seen silver hold up better than gold. And silver's now currently absolutely smashing gold in today's trade. Now, has it done enough to break out? We'll look at that later on today's video, but it certainly has started to improve there. And silver's been a dark horse now for arguably even 50 years. It's been such a bad performer. But is it time? Is it time? It's getting close, I think. What do you guys think in the comments down below? Let us know if you think it's time for silver or whether it's going to continue to be a crap metal for the next couple of years. Let's talk cyclical stocks. We know that, of course, it's been generally risk on since the bottoms in April. And we know that at this stage, most people are going to be following this particular line, which, the markets look pretty similar to, which is the 95 overlay. Originally, we thought it was more of the 98 overlay, which was a kind of basing structure that then would run into a new all-time high. Well, the all-time high is looking very, very likely, but the double bottom base, of course, was broken because the US-China tariff dispute kind of went down as we saw all of those crazy tariffs come off a little bit. You can also make an argument for this one here, which is, of course, when you go to the first 100 days and beyond, for anybody that's got massive reform changes, FDR, Nixon, FDR again, often the problem time is at 200 to 250. And sometimes markets have already made an all-time high at that point. So even an all-time high doesn't necessarily break structure. But you've got to remember the key points in time. And that seems to be around that 200 to 250 days. So something, of course, very interesting for us to watch. Central bank watch, we haven't seen too much extra liquidity over the last 24, 48 hours. And the S&P 500, although it went down a little bit through the session, actually closed red, of course, after hours trade, it is up again, testing these highs. And more importantly, testing the 6,000, which you'll see in the options in a moment, is a very key level. We did get the island reversal over the last 24 hours. That's generally a pretty bullish sign for markets. And although we were hoping for a 5650, 5660 kind of zone, it seems like the market was just like, you know what, daily 20 moving average, we're not going to go under that one anytime soon. And we're just going to kind of respect it. And that could push, of course, if markets continue to hold plus 6,000 back to the 6100s for the S&P. And that would be, of course, quite good indeed. Now, why are we saying 6,000? Well, it is the most traded zone. If you take all of the structure of previous kind of balances between November and February of this year, then we get this 6,000 level. And although we have made an all-time high, not a new high here, not all-time high. Although we've hit this high, we've obviously hit into a very big psychological number. So it'd be interesting to see if the exuberance of this court ruling continues in the market, because the big one is actually the Russell 2000, the small cap stocks, which we'll look at soon. 5950 obviously was the call wall of the last 24 hours, and 6,000, and that continues to be the storyline. 6,000, 6,000, 6,000 are where all the calls are on the S&P, and 5,900, 59 kind of 20 are where all the puts are. So stuck within those ranges. You break 6,000, probably going to 6,100 fairly quickly. Tesla, it's in positive gamma. That's obviously a positive. After hours trade today, it was up about 2 or 3%. So hopefully it can move its way to 400. And 400 is the obvious target for at least options traders. Though I do know that more people see this one. Remember when we were talking about the 280 into 330, 350, less people were bullish on Tesla. I have noticed there's been a massive change in sentiment as people have gone super bullish. So just be warned on that. But at the same time, yes, positive gamma, calls everywhere, a lot of them needing to, of course, be hedged off. Nvidia, on the other hand, now this is going to be interesting. Closes at 135-ish, which we know was a very big psychological TA level, so technical analysis level. 140 plus though, guys, this is a big deal. 140 plus is where we're going to probably open. We close that 147, 150 next stop. 150, of course, up here, back in positive gamma. 140 is a huge call wall throughout multiple weeks. And then all of a sudden we break 150, then we could be going for 175. And you might think that's insane, but this is the way that the markets will run. So if they're running, they run from an equilibrium to the next equilibrium, and it's generally the way it goes. So let's talk charts now, and let's talk about the leads straight up. VIX, as you can see, the volatility market sitting at just around 20. Options markets reducing risk over the last 24 hours. So they were spiking up. And again, another piece of positive news comes out for the US, sending markets higher. So bears just cannot catch a break here at the key levels. Certainly two major key levels we've looked at so far. Every time these tariff discussions have busted the bears at those areas. And so far, of course, we saw bonds go back onto risk for now. Now, in our previous video, we talked about CDS, so CDs, and I still think they're a very big problem in the future. However, CDs obviously don't play out in just a few days. They take months and months and months and months of decline, and then suddenly everything hits the fan. US 30-wise sitting just at about 5%, so no worries there just yet. And US dollar spiked off the news from the courts, as you can see here, pushing higher and actually changing trend on the smaller timeframes towards the upside. Now, higher timeframes still ultimately bearish on the dollar, but you can see here it's pushed up. Be interesting to see how that plays next 24 hours. And because dollar pushed up, gold pushed down, you could argue this is a head and shoulders pattern if you wish to. And completion of the head and shoulders for the short here on gold is 3,210 to 3,205. So that's kind of the next level that you'd be looking at. When you go over to silver, silver held way better than gold, up 0.8% today versus gold currently running negative 0.4. And we are just looking for that 3360, 3370. Got to get through there so that we can continue to build on this current coiling market. And as I often say, if you're going to be early, the best thing to do is be early in coiling markets. And the reason why is because when they explode out, they are ferocious. And as you've seen recently with these little coils on things like Tesla and stuff, they've often been quite ferocious. We got that ferocious move down here, coiling market, boom. Currently coiling market, will it be another boom? Currently each one has moved around the same distance. So I'm sure a lot of TA experts are starting to spot this like we have already. But the thing is, it marks out a really clear 400. And for now, of course, with dancing robots and everything else that's going on with Tesla and the market's just being up generally, hopefully that positive gamma can push through. Now, Nvidia has definitely busted the bears at this point. This was, I think, quite a few bears moving in. We are obviously above the positive gamma level we've been watching for a while. Again, coiling market. You get the earnings. The earnings push past 140. 140 is the next resistance. Next after that's like 148-ish. So I guess the next target most people are going to be looking at is around 148 for Nvidia. That doesn't mean you go chase anything, but if you're in it, congrats. Things look pretty decent. And as you guys know, the biggest trade ever conducted just happened on TSM at a break of a new high. So is that pushing towards like 210? I mean, yeah, at the moment, everything's obviously going up. Semiconductors versus SPY, it's been chopping for a little bit here. So we obviously saw a bit of risk off. Now it's holding. No, that'll be up. You'd have to think over the next 24 hours. And Google, one of our favorites at the moment, is continuing to hold. And of course, putting some rejections on this zone here. So if Google breaks these highs again, next level, 185. So at the moment, I'd probably still be more bullish than bearish. You've got 2050 cross. You've got other reasons to be liking it. And the markets obviously are flying up, as you'll see with the NASDAQ in a moment. HSI, Chinese stock market, comes down to support and hits it and starts to bounce. If it breaks through maybe 23,500-ish, you're starting to change trend back to the upside in what has been just a bit of consolidation recently. Remember, the PBOC have been putting in a lot of stimulus into their markets. So that's helping to counteract the tariffs. And with the news of the last 24 hours, you'd have to think that, again, it's probably not a net negative for China. Let's have a look here at the US 2K. You can see here inverse head and shoulders is the storyline. And I'm very interested in the close, as I'm sure we all are. So we will be watching this close like a hawk because this is a huge breakout level. Is this the Russell 2K starting to play catch up? Is this the next opportunity area? Well, certainly something to watch. And NASDAQ flew in after hours trade, Nvidia, everything else. The thing is, it's so crazy when you think about it that it's actually already starting to make a move up. And 22,150 in many ways is the next target. So you're looking at this high resistance. And at the moment, what's stopping it? I mean, the dark pool clusters that were here that did short off, they've now been ripped apart. The market's obviously gapped and left a bazillion gaps. Eventually, yes, it's going to fill those. But at the moment, there are no extra signs to be bearish. And the two areas of bearishness that we've talked about here and here, while they've both provided pullbacks, they haven't provided probably what a lot of people are looking for, which is that 5 to 10% pullback, maybe even 10% pullback to get down to those levels. And that's just not happening as these markets continue to rally forward. Could they be ridiculous? Sure, they could. But just remember, this is flows. This is what happens. And you've got to be kind of in that mindset of there's another opportunity. And do remember when the VIX goes under 20, you can start to move more to single stocks and other asset classes because they become the better opportunities. Now, speaking of other asset classes, that old sneaky Ethereum looks like it's trying to break out at the moment. And next stop would be like 3,200 on the resistance. So you can see here it's coiling just before. So coiling up just before this resistance. I often like those for breakouts. Ethereum is Ethereum, as you guys know. It does its own random things, but 2750 here on Ethereum. And if you have a look at Bitcoin, you can see that it's just kind of chilling a little bit after those big moves. So although there's massive interest in Bitcoin, as you guys know, it usually goes Bitcoin first, Solana, XRP, Ethereum second, and then the rest of the alts after that, maybe a couple of memes in between. If you enjoyed today's video, then please remember to subscribe and smash that like button. What a bunch of news, guys. Massive stuff coming through here. The US court stuff, I'm sure, is going to continue to be a big storyline of the rest of the week. And of course, it can flick like this, depending on what happens. So stay agile out there. Stay obviously within risk management. And we look forward to covering it all together over the next couple of days. But Nvidia, it did what the market wanted. Bye for now.